What exactly does that infrastructure bill mean for key parts of the market?
Well, Dom, we're seeing a lot of interest in some of these alternative energy stocks, as you said. Stocks like Plug Power and Lithium America, PLUG and LAC, both had really strong call activity for the several days leading up to the Senate passing the bill that you just spoke of. And I got to believe, Dom, that people are looking at Biden's infrastructure plan and then the subsequent multi-trillion-dollar plan that's going to be coming our way, thinking that alternative energies and getting people off of fossil fuels is going to drive interest into these stocks. Also, a stock that doesn't have options on it, ABML, and in full disclosure, I'm long all three of these names.
All right, so John, I remember during the financial crisis, in the wake of the great financial crisis, the American Recovery and Reinvestment Act during the Obama administration. We know that was kind of geared towards infrastructure. We kind of use that as a recent example of what we can see in terms of market impact on some of these, materials type companies and infrastructure stocks. Is this, in your mind, is this infrastructure bill going to be more impactful than what we saw in the wake of the great financial crisis?
Hugely so, Dom. Again, we don't have the final passage of either this $1 trillion, $580 billion in fresh money, along with the rest of the money from COVID. We don't have the full details of that yet, nor the bigger infrastructure bill that's coming our way. But you can kind of read through the tea leaves and see what they're focused on. And clearly, stocks like Freeport, FCX rather, and Cliffs, CLF, have already been getting a big hockey stick to the upside. And the reason is pretty clear. This is not just a one-time spend. That's going to be spent over a decade. So if you think the Fed's hand under the market, Dom, is supportive, you've got to think that a 10-year spend on infrastructure is likewise going to be a pretty strong hand to keep any downside at bay.
All right, so you've given us a lot of those picks. Can we broaden it out a little bit here, John? We have the monetary stimulus you talked about, the fiscal stimulus you talked about. We've got a market at or near record highs right now. Should investors still feel comfortable about being long in this market?
I think so, Dom. We know that the Fed's going to be as accommodative as they can be. And we know that Congress is going to continue to push a lot of money across the table. So companies have been growing earnings at a dizzying pace. I think that's going to slow down the growth, of course. But I don't think that we're going to see either Congress or the Fed pull back any of this spending for quite a while. So if you're in the market, I think it's kind of a fool's errand not to be taking advantage of it and staying in the market. I think getting out, you're creating a taxable event in most cases, and I think then you're just kind of chasing your own tail.